So what's been the impact of post-crisis government initiatives in boosting bank lending to SMEs? And can I start with Omar on this one?
Yeah, so I think when you look at government lending, government initiatives to support the real economy, there are a number of interplays here, Huw, a number of factors at play. So clearly there's some headline grabbing initiatives, funding for lending, the help to buy schemes, which, and we were talking earlier, will and are, I think, starting to have an impact. Some detractors are suggesting perhaps that they will cause some asset bubbles, but nonetheless, it does suggest that the government is putting some action behind some policy rhetoric, and I think that is positive and encouraging. There are other aspects to governmental/policy type intervention which needs to be looked at. So Governor Carney's recent intimations about the prognosis for interest rates environment should, and our research suggests, is giving encouragement to businesses as they look to at what the environment looks like and over the next couple of years. It is clearly a concern for banks, a low interest rate environment, but nonetheless for businesses, I think that is encouraging, and hopefully we should see that act as a stimulus for the real economy. There are, of course, other aspects to governmental involvement because, on the one hand, they are looking at encouraging banks to lend and putting in mechanisms to enable that. On the other hand, if you look at, we touched on it right at the outset, the requirements now for capital, and they are only increasing as people start to put their own sort of, their own finish, the country-specific finish to Basel III, that will have an impact. Leverage constraints will have an impact.
What's your view, Birgitte?
Well, my view is, although I have all my critical comments to banking business practices, I do also know that bankings can't solve the whole growth problem. They need to be a co-player, and so does government. Sure. So the first point I want to make is that yes, government have had some good initiatives like the business bank, funding for lending, etc. The problem is here that it has not really changed the kind of the incentives for banks to be lending, because we can see that lending has not picked up in the way in which it could. But other growth drivers, because one thing is of course finance for innovation, the other one is also growing via markets. And if you just take, if the government wants to support some big challenges, as we need to support green growth, I think it was last year, George Osborne had the spending review, 8 different areas in which we should be supporting. So if we want to support green growth and health, and the digital economy, etc., it's also important that the government is opening up for letting these markets flourish. So the public spending or public support, financial support to these areas, we should go hand in hand with the private support. Is not there either.
Can I just move it to Phil 1 second on this? So Phil, the question is about boosting bank lending to SMEs, and what has government been able to do that? And I think the challenge from Birgitte has been, actually, has it worked on a general basis? And if you answer that first. And then in some specific areas, the government doesn't appear to be following through.
I think we need to be brutally honest here. A number of the initiatives, which again, were initiated, very, very quickly on the back of the crisis in sort of October, November of 2008, were politically motivated. It was that we're doing something to try and help the current credit crisis and the pending recession. And actually the mechanics behind some of those initiatives just weren't in place. So, to be very, very fair to the banks in this respect, they were almost made a scapegoat. They were asked to implement things, at a fairly, at a branch level, when actually the detail of the mechanics of how these schemes would work and whether there was state aid issues regarding it still hadn't been panned out. So how would I summarise that? Lots of interventions. Have they made a real difference? I'm not so sure, actually. I'm a believer, having traded through 2 recessions, the 80s and the 90s, that recessions have a natural cycle to go through. And I think government interventions, particularly from a finance perspective, actually have little impact on that. I think a lot more of it's down to confidence within the marketplace, and I think we'll probably see, you know, an improved forward look really in terms of economic activity based upon the current confidence trends rather than funding for lending.
Jason, has it helped in the bank that you're operating that
The
you know
FLS
there has
scheme precise?
Yeah.
I think I would agree that the mortgage market has benefited more tangibly than the owner-managed market, the SME market. I think you can look at the stats. I think, you know, lending growth has been relatively flat since June last year. Clearly, some of the banks have drawn down significant sums from that scheme, but it hasn't necessarily fed through to the SMEs.
The reason, or one of the reasons, and if you read the media, that we got in the position that we got in is because the banks employed investment bankers because they were paranoid about their business model in the 90s, so they start buying investment banks. Investment banks start changing the retail model because they get access to the financial markets. They bring innovation into the banks. They start to securitize. They can then churn their asset side of their balance sheet. They get more money out to business. That business, the economy thrives. We see a lot of growth. We see retrenchment in 2008 as everybody wakes up to some of the risk not being managed correctly and not knowing where it's placed. And that starts in America. It comes over to the UK. And so we get where we are in 2008, 2009, and then a lot of the ideas, especially that the government are saying, is as Omar said, is oh, we need more lending. But that's what got us into the position in 2008 in the first place. And so I get a bit confused about what the government's trying to actually achieve. If they're trying to intercept markets, it might cause, you know, bubbles in various places. From an academic point of view, it seems a little bit strange, but it might help. I mean, I take it we don't know until we see the result of this. But I think they could crowd out the banks, so that could be an initial problem. And the other thing is that the confidence of the public to put the money in the banks is, I'm not sure they want them to then shovel it out to these small, medium-sized industries, which might be more risky. So depositors, we've had all these reports saying you've now got to ring-fence all these different areas of your bank, and I'm not sure depositors want the banks to go gung-ho with their money now. I think they want it to go into safe-ish places, and the other type of banking can be done elsewhere. So there's risk apparent everywhere, and I think that especially the consumers need to understand that a little bit more. I'm not quite sure what the government aid is there to do. If there's a broken market and they're just helping us to get out, and there's a time frame and everybody knows this model and where to go, then maybe it will work.